I'm Catherine Ross, and I'm here live from the NYSE with Action Alerts Plus Senior Analyst Jeff Marks. As a reminder, Jim Cramer's out all week. Jeff, during the May Action Alerts Plus call, Jim was talking about China and how he thought that he had 6 things to why Trump should not act out against...
Why he shouldn't back down.
There we go, thank you.
Against China.
Sorry about that. Yeah, so why he shouldn't back down from China. So with the Huawei news, I'm wondering, is this a sign that Trump is not backing down?
Yeah, absolutely. I mean, Trump is making, the ban of some of the Huawei equipment. It's a matter of national security between Huawei and ZTE. And, this is tough stance. The market's actually acting very resilient to the news today, which we haven't seen in the past couple of weeks, is when tensions escalate, usually we see the market go down. Today it's looking pretty strong, actually. So that's kind of, maybe saying that the market's finally saying, okay, maybe these companies aren't really being too exposed to what's the tariffs. I mean, we heard from Cisco last night, and we're gonna dig into that Cisco quarter on our Action Alerts Plus call after this. But Chuck Robbins, they took a proactive approach to China. They're getting out with a very minimal revenue exposure, and they're mitigating the tariffs. So, I think if more companies kind of follow those guidelines, maybe this impact wouldn't be as big as what everyone's kind of building it up to be.
That's a good point. Now, I just want to make sure that you guys, if you want to check out those 6 reasons that Jeff just stated, because my mind is apparently not here right now, go to actionalertsplus.com to rewatch the May members-only call.
Yep,
now,
so all of our calls are actually archived with transcripts, so very easy to read, very easy to rewatch. You can really hear what we've been saying about the market for the last several months, the past year or so. So it's a great learning tool. We do a lot of rules-based stuff on these member calls, so it's a great tool.
You mentioned that the market is up, and it is, and that's partially because of Walmart's earnings, which came in pretty strong this morning. So I'm wondering, when we're looking at Walmart, which is real money stock of the day, when they have 19 straight beats on comp sales, what does it take to get that 20th beat?
That's a good question. I think really what they need to do is they just need to keep following their playbook. They're doing things right. E-commerce has been huge for them. They have a lot of new initiatives coming up. We have the free next day shipping, which is, in my opinion, pretty revolutionary. A lot of the buy online, pick up in store, groceries. So as long as they keep playing by their playbook, I see no reason why that momentum that we're seeing on comp same store sales can't continue. And then, tariffs is going to be another thing people are going to watch on with Walmart, but please, I mean, if you look at the commentary management's putting out there today, they're still going to be the low cost provider out there. Everyday low prices when you shop at a Walmart store. So I think the market is really is being receptive to that today. That maybe the consumer isn't going to be as hurt as much as what everyone is anticipating.
And I know that Kevin Kern, our Real Money reporter, has been on tariff watch with Walmart all week, and he's going to be diving into that over on realmoney.com. Now, Jeff, speaking of earnings, I want to move over and talk about Pinterest, because they're about to report their first earnings as a public company. And I'm wondering, what is one thing that you're watching that earnings report?
First off, are you a pinner? I'm not a pinner.
I used to be, but I'm not as much anymore.
That's interesting, because I was going to say is, from what I gather is that Pinterest has a pretty engaging, active user base. So what everyone's going to be looking for is how they monetize that. And the metric you're going to want to pay attention to there is ARPU, or average revenue per user. If they can get that number growing, that'll really show signs that they're monetizing the product, and that'll be encouraging for investors.
That's a great point, and it kind of feeds into the Instagram model of how they're connecting cards. You can buy it right there. You can buy any product that you see. So it would be interesting to see how Pinterest duplicates that. All right, so I also want to talk to you about Nvidia, which is reporting also after the bell today, and we're going to have a live blog over on TheStreet.com. Eric Johns is going to be running it, and I will be monitoring our Twitter. I'll be watching the earnings call and the earnings report. I'll be live tweeting that all day. So, Jeff, we've talked about, you've talked about Nvidia on the show this week, but when it comes to China, because that's really what's in the headlines today, what's one thing that you're looking at in the report that has anything to do with China?
Well, look, I think that a lot of the chip stocks are going to be down today because of the Huawei news. So, that's more the 5G side, which Nvidia is not really in. So that's not really an issue. I mean, when it comes to China, it's really going to be about the data center spending, first off, and as well as the GPU inventory. Previously, that inventory channel has been pretty clogged up. It got pretty clogged when the Bitcoin kind of craze went bust about six months ago. I know Bitcoin has since come back. So that's kind of really going to be the key thing to watch there is if progress has been made where the channel has been flushed through, that way gross margins can rise again.
Now, before we go, I have to talk to you about Berkshire Hathaway's stake in Amazon, which is valued at over $900 million, which is so close to $1 billion, which is kind of crazy to me. But, let's take this from an investing education angle. And when you have a portfolio that has a large position in one single stock, what does that mean?
Yeah, so first off, Berkshire's investment is kind of like a drop in the bucket to them. I mean, they could toss around $1 billion left and right.
Which is insane.
Yeah, but it's still a strong endorsement for the company. But as you bring up from an investor perspective, that's a great point. And it's actually, you mentioned our Action Alerts Plus call earlier in this program. We actually talked about what it means for investors if they have a position too large for their portfolio, what it means and what are the impacts of it, back in our, I believe it was our August conference call from 2018. So really good point there. And we actually used Amazon as an example, so it's perfect here. But so really what we kind of guided for is that if you have one position in your portfolio that you've become too beholden in because it's too large, and it can affect, and its daily swings will affect the movements of your portfolio. If it's down too much one day, your portfolio could be down even though it was an up day. That might be a sign you're playing with fire, and that might be a sign that you might need to just trim it just to kind of smooth things out and make sure you're still having the benefits of diversification within your portfolio.
And I know that that's something that you at Action Alerts Plus, you and the team, ZebFEMA included, really focus on, which is rebalancing, diversification. It's really important.
Yeah, I mean, we used it for Amazon as an example back in that August call, is because, Amazon's been the largest position in the portfolio for quite some time. And quite frankly,
not $1 billion.
Not $1 billion worth, but quite frankly, it got too big. So we trimmed it a couple quarters ago, and this was in our August call. So I mean, we saw how the stock did when the whole bear market fell, in the late fourth quarter of 2018. So we protected ourselves through that trim. So it's just an example of it's a case study, if you will, of why you need to make sure that not one portfolio position is too large.
All right, Jeff, thank you so much. All right, so that's all we have for today. For all of you watching on TheStreet.com or on Facebook, we are now jumping over to our Action Alerts Plus members-only club video on actionalertsplus.com. I'm Catherine Ross. Thanks for joining us, and we'll see you tomorrow.